What's going on, guys? Russo Trades here. I wanted to get on and do a little daily review. I just got home from work. The first two things I will start out by saying is Dodgy and ICT always told me over and over for the past 3 to 4 months since I've been studying them, screen time, screen time, screen time, and I never understood what they meant. And really, it means what it is. Like you need screen time. You need to see price do something over and over and over and have that pattern, that signature in price, whatever you want to call it, you need to be able to see it over and over. Like, let's say we sweep liquidity or we bounce from a fair value gap or we inverse something or we create equal lows and we run them or create equal highs and run them. Like, you need to put in the time and have that screen time, seeing it over and over and over. And now you have that confidence in it, knowing that when you see an A plus setup and you're targeting equal lows, you know that it's just going to be a low resistance liquidity run and it's just going to go dump and take out those equal lows. That is exactly what happened today, actually. I wasn't able to really trade. I took like two trades, I think, while I was on break at work. But other than that, today was good. The second thing I will say too that I was going to talk about before getting into the daily review is some people get confused with ICT. They think we're looking at the market in terms of fair value gaps, and Dodgy says over and over that we're looking at the market in terms of liquidity, not fair value gaps. So I think that's very important. Sorry, I was making sure my girl's dog was okay for a second. Thought she was choking on something. But yeah, so the market we're looking at the market in terms of liquidity, not fair value gaps. Keep that in mind and yeah, that's very important. Unless our draw on liquidity is to rebalance an inefficiency, that's our draw for the moment, then okay, then we can look at the fair value gaps, but mainly we're looking at the market in terms of liquidity. And I mean that is a form of liquidity, is it's an inefficiency in the market, and that would be considered sell side or buy side liquidity. Anyways, let's get into today. So this morning when I woke up, I was getting ready for work on my way to work, and I seen we were just very bullish. I was seeing how we respected these 1 hours here, and we really didn't respect them at all. So I knew the draw was this high and these relative equal highs here. So when the market opened, we didn't really get an entry to that. So I stayed out. I didn't chase it. I didn't trade it. Like there's really nothing I can do there. Um, I was actually working at the time, so I couldn't even trade. But if I was trading, no, I wouldn't even have taken this one because it hit the internal liquidity before the candle closed. So that was invalid. I mean, if you're really confident in the bias, I guess you could have chased this play and got bagged like 95. You could have bagged like 30 points there or more, 40 points, 50 points. So after those hit, I was like, okay, buy side hit. At least our buy side for the time being. I did see more buy side up here depending how far we were coming up, but I was like, we might come and run this high because it is a high inside of fair value gap, good liquidity pool. But I was like, we're really high up here. We kind of need to retrace a little bit. So I wasn't too confident in that. I did see on the 4 hour though, we were delivering from this after we had swept some form of buy side. So that was nice. And I was really just looking for short entries here. This was when I was on my lunch break and I was able to take a trade. So I'll go to the 1 minute chart and see show you what I saw. So I had on the 5 minute actually. Um, you know what? I'm gonna go to Telegram because I have the screenshots of the trades and the trade executions. I sent it to my friend JD because I'm not seeing it right now. Relative equal lows. I'm looking for relative equal. Oh, they were right here. So this was the relative equal lows, and then our 1 minute entry was right there. So I took this in live time. Yes, it was invalid according to Dodgy's rules, but with this momentum, I entered on this candle here and I targeted those equal lows. Um, like that's just an A plus setup. We swept liquidity here, we swept equal highs, momentum down through the fair value gap, order block created, equal lows below. We swept buy side, we were delivering from a 4 hour fair value gap. So I mean, this was just really textbook. I didn't see any other trades because I wasn't really looking at the market today. Like I said, I was working, but let's see if there was anything else textbook. See if I missed anything. Real quick, I'll show you what I sent my friend JD. I'm gonna have to stop sharing for a second, do a new share with my whole screen so you can see. Um, so as you can see, we had the relative equal lows on the 5 minute, very obvious, stood out to me. So I was like, we're gonna go hit these at some point. I also seen we were delivering from this 4 hour and we took buy side. And then I seen this and I'm like, I'm in. I got in this trade and boom, it was just easy money there. So that was nice. That's an A plus setup. Like every time that should hit, 9 times out of 10. I can't say 100% of the time because nothing is 100%, but now let's look for some other entries. I mean, going into lunch, I guess this was okay here. Let me inverse this. It looks like it failed because the candle closed back above, but if you tune your eyes to see this, watch it more and more, you'll be able to see that that inception fair value gap held us up. Um, that's a screen time thing though, because some people would be like, oh, this is a losing trade. This IFEG here, this 1 minute IFEG here failed. Technically it did fail, but if you seen the inception holding us up still, I would have held my trade if I was in this. I wasn't in this. The only trade I took was that one I showed you. I think I took one other one. Um, so that was nice. I really like that. That's textbook. I mean, this is textbook too right here. Delivering from this. Let's make that there. Delivering from that. We inverse this. Like that's very solid right there. Very nice trade. Delivery from here. We knew we had to rebalance this for a value gap here, so that could have been your target. I mean, quick little scalp like right there. That's very high win rate play as well. Honestly, at this point, if I was watching the market, I would have seen we were on the sell side of the curve, which I talk about a lot, like market maker buy models, market maker sell models. Not to make things too complicated, but I wouldn't have taken this long right here. Yeah, you can see there was a long setup. It failed, but I don't think I would have taken this with the yeah, I just don't think I would have taken this with this after we took buy side and deliver from before. I don't think I would have taken this long. Like it looks clean, but it failed because why? Also, we had other fair value gaps up here, so that's why I wouldn't even have taken it. See, I got it there. So we didn't inverse this. That's the problem. This one failed because of that. So you got to start to learn to see these things in live time. I guess this was okay, and then as you can see, the inception held us up once again. Caught a nice move there. Um, this long failed. Um, but it's the wrong time to trade. This is lunchtime. We shouldn't even be trading this. Yeah, so don't trade this. It's lunchtime. Don't take these trades. Makes no sense. Um, yeah, I didn't really see much the rest of the day. Oh, I took this long right here when I got out of work. So I seen this long and I took this long. I actually was targeting lunch highs. I think here where they at. So yeah, I was targeting lunch highs and these highs right here. There, so it was relative equal highs. I ended up moving my stop to break even after like this candle. Ended up coming up and we were like what 3 points away and we ended up just boom dumping. Got stopped to break even. It is what it is. I already made my money for the day. I was content. I only had a micro on this trade, so I wasn't even sized in heavy, very light. No worries. It was a break even anyway. That's why it's important to protect your capital and risk management, setting your stop to break even, taking partials, like all these things that ICT preaches, like there's a reason. There's a reason for it. He's been doing this for 40 years. Just listen to what the man says. I also seen, oh, I didn't send it to JD, but I seen this right here. It was so it was pretty much the same move I caught in the afternoon after I got out of work. This one failed, and I'm like, okay. Not the greatest, but the reason I was looking at it is because this was a swing low right here to the swing high. We were in OTE. We also were delivering from this very big, obvious fair value gap. So I was like, okay, maybe this long could work on the 5 minute. I was telling JD if we inverse this, we should go up to these relative equal highs here. I had marked out all day that never really hit. So there's a lot of liquidity there that should be taken at some point. This one failed. I'm like, okay, no worries. I didn't even take the trade. I didn't see it in time. But this is the importance of risk management. Then we got another entry right here, and I'm like, if I seen this in live time, I would have taken this one and I would have lost the trade. But then I would have seen it gave us a re-entry, and I would have taken this trade, And that's the importance of risk management because if I over leverage or risked all my capital on this trade, I wouldn't have been able to stay in the game for this trade or had the mental capital or actual capital to take it. So after, if someone lost this one and took this one, they would have made all their losses back and some. So that's the importance of risk management. That was a nice inverse. It worked. Um, this was a nice 2022 model right here. Don't really trade it, but we had a liquidity sweep, market structure shift, retracement to the fair value gap. So if you went to the 1 minute and found an inverse in there, that would have been nice. It looks like it failed. Nope, it didn't fail. The inverse held. So that was a nice trade towards the end of the day there. Didn't take it, wasn't looking at the charts, but yeah, that's the daily review for today. Keep studying, keep grinding, learn more about liquidity, learn more about fair value gaps, keep watching ICT stuff, figure out your psychology. I'm in the process of doing all this right now. I mean, just like I'm preaching to you guys, these are the same things that I'm working on is just risk management and all that. And I'm also gonna give an update on the challenge accounts that I have with Top Step right now and show you what's going on with that. So as of this was the account that I bought last week at the end of the week. It's up over 1,000, and this is the account I bought at the beginning of the week last week. It's up over 1,000. So we're doing good on that. We're playing very low risk. I could be aggressive and pass it quick, but I mean, there's really no point. But you see the potential, like with these little 50K accounts, they cost 40 bucks each. Like that's 1,200 bucks in, a week. And then on another account, 1,200 bucks. My goal is to get another challenge account with Top Step and eventually have the three funded 50Ks with Top Step. And, two of them could be, to pay the bills. The last one could be, just fluff money, just to, extra money to throw into savings or extra money just to throw in a personal account to trade with. Because honestly, that's the goal. The point of us trading is what? To leave our jobs, to be our own bosses, to make enough money. And sometimes trading for these prop firms can just be like slavery within itself because now you're relying on the prop firm to pay you out, you're relying on these rules. But as of right now, if you don't have capital, definitely recommend you trade with prop firms. Eventually, the goal is, like I've said before, is to trade your personal funds. Like get a $10,000 personal account and start growing it over time. Next thing you know, you have 100,000, and you keep compounding it. Um, Definitely recommend looking into that as well. Compound interest is, I believe, the seventh wonder of the world. So compound interest is definitely very important in what we do, and I definitely recommend checking out everything I'm saying and to see if it's true for yourself. But thank you for tuning in. Thank you for the love, the support. Leave a like, leave a comment, and yeah, have a good day. God bless.